Welcome to OpenECRI's Trader Training. My name is Toby Gennaro. What I'll be talking about today is how to use multiple time frames. We'll look at the correct chart pairings and use higher time frames to get confirmation of our trade setups. Multiple time frames provide us a bigger picture view of the markets and the trends that we're trading. So let's take a look. So looking at the same trend in another time frame is really just another ingredient. This helps to improve the probability of a successful trading outcome. It provides us with additional information and possibly a bigger picture view as to what may be a longer term move. A trade setup on a 60 and 120 minute chart will have a longer trade duration than say a 2 and a 5 minute chart. But even when we're trading higher time frames, we still want to time our entry with the lower level charts to get as precise as we can. So it just makes logical sense if we identify a trade setup on the 120 minute chart, then we should also check the 240 minute chart to confirm that trade setup. If we find that a higher time frame confirms the setup on the lower time frames, now we have two charts confirming that move. The higher time frame providing us with the bigger picture view as to what's really going on. On the higher time frames, we will also notice key levels of support and resistance that will provide good clues as to the levels we should be buying or selling at when we find a trade setup that meets our criteria. This will translate into better stop loss protection and better target identification. For example, placing stops protected by major support and resistance and placing profit targets just ahead of support and resistance. The higher time frame really helps to optimize your trading setups and parameters. Having agreement then from more than one time frame just adds another reason for us to take the trade. So what we're looking at here in this table is the order of the time frames and where the setup is occurring. And what I mean by that is if the trade is setting up on the 2-minute chart, then that is called the precision chart, or P. What that means is the trade is best defined on this time frame. The next time frame above the trigger chart P is called the confirmation chart P1, or the 5-minute chart. These are just some examples of the chart pairings in this table. Get in the habit of looking across a series of time frames to find the high probability setups. This table is just giving you an example of looking to the next higher time frame, whatever that may be, to get that confirmation. Trends can be complex when looking at multiple time frames, so make sure you're checking the higher time frames in addition to the setup and confirmation charts listed here. This will ensure that you're trading in the direction of the higher time frame trend and will improve the overall probability of the trade outcome. In addition to this chart, for example, you would want to check the higher time frames for a setup and confirmation on the 2 and the 5-minute charts, such as the 15 and the 60-minute charts. Or if there's a setup on the 60 and 120-minute charts, then you may wish to check the 240 and daily charts to see if your trade setup is in the direction of the higher time frame trend. This helps to keep you focused on trading a trend from one side and not trying to take trade setups going counter trend. This is just one aspect of a trading strategy. If you're interested in learning more about technical trading, check out the OpenECRI website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRI's Trading Education.